Right, good afternoon, guys. Well, that was a bit, as you know, I haven't done this for quite a while. So, you all know who I am now, Carol Harmer, and I was going to talk to you now about, oh, you've missed me. Oh, that's really sweet. Yeah, it's been quite a while, but I'm back now and ready to go again. Oh, bless. Right, as you know, the sort of webinars I do are very much a interactive video webinar, and if anybody's got any questions or they want to look at any specific markets, then please let me know. Hi Jen, you have no sound. Can everybody hear me? Yes. Oh, hi John, you okay? Okay Jen, I'm not sure then why you can't a great voice. I'm not sure why you can't hear me. I'm really sorry. You got it now? Fantastic. Okay. Right. As you all know, let's get back to it. As you all know, I like to do webinars where they're very interactive. Now, unfortunately, one of my first ones back has been when there's been absolute carnage on the street and everything's gone absolutely AWOL. So I think today's going to be quite a good day when you ask me all sorts of questions, and I will give you answers as much as I possibly can. And also I can go through a few things with you, and we can have a look at, obviously people are looking at the euro sterling, dollar yen. I don't think we look at the dollar Swiss. And obviously we're going to look at gold. So what should we start with first? I think we should start with gold, as that seems to be yes. I think it's very difficult to actually pick a bottom in the cable at the moment. I do still see it going lower, I have to say. And at the moment, I think you're just safe for selling into any short-term strength, looking not to bottom pick because you can't, but anything between 148.30 and 148 is where you'd be looking to take your profits in cable. And then you look again, but we can look at the chart if you like, which I think is quite a good idea. As you know, I like to go through various time frame charts. If we start off with the weekly chart, which isn't looking brilliant, I have to tell you. I use stochastics, I use RSIs, I do look at moving averages, all of it, everything is telling you it's going lower. And this is even a weekly chart, but if you go into a monthly chart, you can see quite clearly that the trend was broken. We didn't get through 52.5 or 52.17. You can see there that we've gone past our first target here, and we probably are going to go to this one, which is between 143.5 and 142.30. People say it can't happen. Well, we know it can if you take these indicators off for a little while and we push the chart up a bit. You can see quite clearly that you never say never. And if you look at this one, you can actually see that may well hold it initially, but we could quite happily go back to here. There is no reason to buy sterling at the moment in anything but the extreme short term. So we've done the monthly, the weekly doesn't look better. Let's look at the daily, and we've got a candle chart so you can see it more clearly. Now you can see with today's action what it actually did. I don't look at candlestick patterns, I have to say. I'm not really into it, but I do like the green and the red. But you can see clearly that when it went to 50.27, it actually had no depth to it, going and staying up there and back we've come again. You can see by this long bit here, with most of the action being around this area. So we are looking today at 149 as another break point on sterling. And this is the CQG. package, and yeah, it's really, really good. It goes back as far as in the 70s, because obviously being a technical trader, you want to have as much data available to you as you possibly can. And that's why I use this system, because I can go back. Yeah, it is quite expensive, unfortunately, but you know, in the big spectrum of things, to pay a lot of money. Well, it depends. I mean, you can get the CQG system for about £450 a month. You can make that in 10 minutes. So one of the key things is to have the right system with you, because if you don't, you're always data is very, very important. It's part of everything that we do as technical traders. You've got to have the correct data. You know, if I could get away with using one of the spread betting systems, I obviously would, but you don't. You know, you get what you pay for. Especially when you're trading, you have to have the best of what's available. And so far, this, Bloomberg and the Reuters are the best that I've come across in all the years. So yeah, you do have to pay a bit for it, but you know, it is worth it. So yes, in my report, I did say that that cable was going to go down. I don't think there's any reason at the moment why that should change. Yes, we're oversold, but markets trending do get oversold. Yeah, that's correct, Jen. 143.5 to 142.5. Absolutely, there is no technical reason why that can't go down there. Once the market, if you look what it did from here, I'm sure you can all see this. You can see this key reversal day quite clearly. And from then on, it's just been a one-way street. I mean, below here really should have held it. It didn't. And once that went, you know, you had to go with it, really. And down we've come. So I do think that there's more to go on this. That's not to say we're not going to correct back at some stage, but you know, you have to look at the longer term. Yes, Boyke, there is sound. Everyone else can hear me. You have to look at the longer term, you know, data on this and the longer term trend, and the trend is down on cable. So that's that one. And also, if you're trading sterling and you're trading the euro, you've got to look at the euro sterling cross. It's very important. You know, and the other crosses, but I think the euro sterling is the one that's standing out at the moment. This isn't alcohol, it's water. Just before I did this, I swallowed something horrible, so I'm trying to get rid of it. So, is there any, well, there are other markets we want to look at. I think we have to have a look at gold. Does anybody want to look at gold with me? Okay. Gold is quite interesting at the moment. And I'll show you why. Let's look at the monthly gold. Okay, so we put our stochastics on, we put our RSI on. We'll drag them down here because we're not really that bothered. We drag them down there. Right, now if you look at monthly gold, you can see very, very clearly. Let's drag that out a bit. Okay, you see where we had this bit here. Okay, now all the time that gold could stay above a trend line, and we had quite a good one, and it came in around 11.97. Now obviously it was a rising trend line. Well, to be honest with you, I'm not an economist. Okay, now maybe it will support it for a little while. Maybe it will. I don't know, but I can only tell you what the charts are saying. Okay, and all the good data that's coming out of the UK hasn't made sterling rise against the dollar. We're looking at it against the dollar. If you're looking at it across the board with the other currencies, sterling's been extremely strong. Okay, on the euro sterling we was at 70, which is 1 42, I think 142.70 is the high we got on there. So across the board, it's strong against other currencies apart from the dollar. Now look at gold. Let's look at gold because it is important. We broke through that trend line and this next level is 1131. Really important. If you look at this monthly chart, you can see we are not oversold at all. In fact, we're not even entering oversold territory. Now, if you look at that chart and that break of that trend line and the fact that at 1307, it couldn't get any higher because that was the 200-day moving average. We've come down a lot, absolutely, but gold does that. It really is one of those whippy animals. You can see that, you know, right. Don't look at this bit because that's when gold really wasn't doing a lot. But you can see that we've been in this sideways pattern now for like 2 years. I know it's sideways isn't really you cutting it, but you have been able to buy and sell at specific designated levels, notably 1400, 13.5, and you've been buying anything down to 1200, 1195. Now we did blip to this 1131. We did come back, but we broke this trend line on Friday, and because we've broken this trend line on Friday, and because the market isn't oversold on the monthly charts, you're going to get longer term traders, longer term hedge funds, all looking to dump gold. That isn't to say that trading, you're not going to get the market bounce from 1133, 1131. I think you will, but I do think the top side is going to be limited, and I think it's really, really, really going to struggle getting above 1200 again. We've made the break. When we made the break before, we did go back up. This time we've done it again. Now, normally markets fulfill their downside targets the second time they try and break, and this has done it now. And if you look here, you go through 1131 and you stay there, you're looking down to this area here. Now I remember trading gold 2008, 2009, 2010, and like 1,000 was, you know, gold was higher then because we'd come up from 250. So gold was high. It's in relative terms, and technically there is nothing to stop the market going back down to this 10,000 level here. Nothing. So be careful of it. If you're going to get a whippy move back, it's not going to go back far. It's going to only hold 1197, 1200, and then I think the gold's going to go lower again. And it's not looking great, you know, it really isn't. Yes, you're going to get a correction in the dollar. Everything's focusing on oil prices at the moment, which I have to tell you do not look wonderful. Although I don't trade oil, I don't like it. But you have to be aware of it because that is what is running the market at the moment. So for gold, I think any short-term rally, you're looking to sell into it. Now, if we go to a shorter-term time frame, I don't think the weekly is going to show you much, only what I've said. If we go to the daily, I take that trend line off and put the one that I was looking at the other day on here, which is, you can see it, you know, you can see it quite clearly. We bounded off of it, we came back, we closed above it, we tried that day to get higher, and that was 12. If I put that moving average on, that was 12.23, and that was it. That was as high as we got. Once that broke, down we come. That's where we're going to, 1131. You may see a bounce off those lower levels purely because it's a November 14 low. Remember, we're not that far away from November. It's only March now. So, yes, we can bounce back. But looking at the monthly charts, we have a different picture now, and gold is looking weaker. Now, any questions about gold before we move on? Come on, Boyke, you've normally got a lot to say. I think so, Jen, yeah, I do. I think 1131 is enough for the short term to hold it. We should see a spike back up. I don't think, I'm fine, thanks, Boyke. I don't think it's going to go back above 1200. I don't think it's going to go back actually through 1195. I think that at this stage you want to be looking to cover short positions ahead of this 11.33, 31 area, and then don't bottom pick. But if you're going to, that would be a good place to go in short term and buy, looking for a bounce back. Overall, we're looking for levels to sell gold. Are there any other markets anybody wants to have a look at, apart from oil, because I don't have it on my system? I think you'd be quite safe. I say safe loosely, but I think you're going to be quite safe buying gold at around 11.35 to 11.31. All right? Even if the stops go off, because we are looking oversold on the daily charts, not drastically, not direly, but we are looking at them, and people will be looking to this level, which we pointed out last week. This 11.31 was very important. If you're going to buy gold, but you're only going to be buying it for a very, very short time, 1, 2, 3 days max, then down we go again. Dollar CAD. Yes, Sonia, I can. Let's get rid of that one. And then we'll look at the euro, okay? Because as you're scrolling up, I can't keep up with you all. Okay, dollar CAD. There you go. Right, our target that we put out on Monday was 128. We have hit 128, okay, on the daily chart. So we'll take the trend off. Now, obviously, with the dollar yen, we're very, very, very linked to oil. And as the oil price fluctuates, this will fluctuate too. If you look at the dollar CAD, you can see there was our 128. There's our 127.99. It's nearing. I don't have favourite yen pairs, but I'll have a look at the euro yen for you in a bit. That's the double top. Technically, this market should trade lower, which would mean that the oil price should rise. Okay. But we have to look at them, although they're very closely correlated, we have to look at them individually. Now, as long as the dollar CAD can stay above 126, 125 and a half, we should be okay to go in and buy it. The only problem is this double top here. All right, so any profits you're taking before that, you do not want to hold long positions really in front of this level. It's only if we break it and you really want to break 128, 30, 35, then you can go in. And if we go out and look at the weekly chart, actually it's probably the monthly, you can see there, that target there will be 130.60, okay? But that will only happen if we break this double top formation, and that is at 128. So your buyers above 128.30. We are overdone on the monthly chart, which is not surprising considering where we've come from most of last year and definitely this year. But this 130.5 level is quite important. As I say, if we break the double top, that's where we're going to go to. But for the time being, I'd played the dollar CAD from the short side, any bounce back to 127.80, actually 127.60, 127.80, stops above 128.35. Any questions on the CAD before I move on? It did. It failed at the 155 area, and well, it might be, but you've still. It's really, really hard to bottom pick. I think from 148 to 147.5 is where you're going to see quite a bit of profit taking. As you say, we've come down from 155. We do have the S2, the weekly S2 at 147. I've got it at 147.75. So there's no safe area to buy into a downtrending market. Okay, let's be quite clear on that. You're going counter trending. If you're going to do that, you've got to do it for a very short space of time. You're not buying it for any length of time, and you've got to keep your stops tight. People love a downtrending market. It's an easy way. No, there's no easy way to make money, but it's a quicker way to make money. As you know, they grind higher, they go up by the stairs, down by the escalator. So if you're going to be doing that, please do it for a short space of time. Don't be buying sterling in the longer term against the dollar down at these lower levels. I don't think it's going to hold just yet. So back to the dollar CAD. Any other questions on that? Okay, then we'll go and look at the euro now, because I know lots of you like the euro. Eek. Do you know what? Even on the monthly chart, if I do a bar chart, because I'm going to be able to get more information on that, right? I mean, what do you say? It doesn't look big, does it, really? To be fair, this is the sort of area that we're looking at, which is 10503. Was our first one, and this one is 10335. Okay, you can see where we broke. 10335 is where we broke up from, so this would be a natural level to go back and take a look at. Now, we're not that far away. We've been to 104.95. We're now trading at 106.25. Okay, we're like 150 points higher. But if you look at this monthly chart, and we do a trend line across here, that really is the sort of area where we're looking at, and these are very slow moving. So this going to there, really, it's not that far away. So you've got to be very careful of any long positions unless we get to this area here. I think then that's quite a safe place to buy. If we put the, if we can get the monthly pivots on there. Yeah, we can. Look, the monthly pivot comes in at one. No, we can't get them on that. That's too far away. So that would be the area that we're looking for euro to sort of stabilize at. But can we hold it? You know, can we come down to this area here? Absolutely no reason why we can't. Go to the weekly chart, you see, even though we're oversold, we're pointing lower on a weekly chart. It's not a good thing. Everything's negative. RSI, it's not that drastically overdone. Yes, we're looking at a little bit of divergence, but I don't see that much in it. I think we go lower, and I think any bounce back to the break point of 109.90 is a good area to resell. If we look at the daily, which I can do on a candle chart now. If we look on a daily, we are looking to base a little bit here, but again, only to here. You have to be very careful. If we put retracements on, and we've had very little retracement at all. Our 50% retracement comes in at 110.13, so anything 109.90 is a good area to resell. And also these would correct back to neutral levels, letting us feel confident about selling again. You want the euro sterling, yeah? Any other questions on euro before I get off the page? Who are you? No, no more questions on euros. Okay, we'll go on to the euro sterling then. See, we've come from 142.15. Yeah, but this is the way the market is quoted. Go back to the monthly chart initially. Doesn't look brilliant. You know, no reason we can't come back down to this level at all, although, you know, obviously 70 is a psychological level. So I think we're going to hold this. We've been down virtually to it, been 70.34. I don't think it's going to go that much further down at the moment. Okay, so we'll look at the weekly. I think you've seen nearing 70. It's such a psychological level. So I think in the immediate term, if you look at stochastics, that's on the weekly. RSI on the weekly. We've come down a lot. I mean, 80 has been like a pivotal level for this for so long. To actually break through the 78 level, you had 70 in your mind that where it was going to go, and that's where it's gone. We did have levels at 73.5 and 72.5, and it blitzed through them. It didn't even pause for breath. This one though, 70, it's going to be quite a tough one to break. How do I handle economic data and releases? Well, Friday didn't handle it, I have to tell you, okay? Because although it was a good number, I don't think anybody expected it to fall quite so fast, quite so quick, although we had put out this is going to go lower. It did it very, very quickly and has continued to do it all this week. You know, but you look at the markets, they haven't been looking strong for a while. We've seen them really struggle on the top side. Generally, it was great for a gold short. Absolutely right. Great for any short. Generally, I only look at non-farm payroll, I have to say, because I think that's the one that moves it the most. I mean, when you get the FOMC come out and give their view, really in the last few years, since 2008, 2009, they haven't really said anything different. You know, when you look at CNBC and these economic figures come out, you probably got 25 different views each figure. So if they can't agree on the figure that's out, how can any of us as traders make any sense out of them? I think what you have to, for me, this is just me personally, charts work. So you're always looking for something that is tried, tested, you know, proved, and these are proven to work fine. So why knock it? You know, whatever time frame you look at, it doesn't matter. A trend line is a trend line. You know, you can see where that held that for so long. Now, once that broke, why would you go against the trend? Yes, Boyke, we've been through this before. Purely a technical person. Yes. Although I do have a sneaky peek at the non-farm payroll. And I do have a look at the Fed when they come out. Oh, that was big. Let me just go back on that. I don't think we're going to 170 again on sterling, really. I really don't. I've seen nothing in the charts, monthly, weekly, hourly, daily. I don't see anything that says 170 again. I can't actually see 155 either. I think since last year, the middle of last year, I remember doing a seminar in Madrid in July, I think I did it, June or July. And I was asked lots of questions about the currencies. And I said then, you know, they do not look good. They really do not look good. And we expected, and I said it, you know, it's going to go up a few hundred, and then it really is going to fall. And at the moment, there is nothing to say that it's going to change. with any trend, whether it's an uptrend or a downtrend, but especially a downtrend, because they're so much more volatile than an uptrend, but especially with a downtrend, these supports will only hold for a short space of time. You know, is there a black hole in sterling? Is there a black hole in euro? Yeah, there's no reason, if you like, why sterling against the dollar should not break through 142. There's no technical reason why it shouldn't. I don't see anything. I think with the unless we see something bad that stops the dollar's strength, sterling against the dollar, not the other currencies. You mustn't be misled by its sterling weakness. It isn't. It's only sterling weakness against the dollar. We're looking at dollar strength here. Sterling is strong against every other currency. Not today. We've had a correction. Overall, it is strong against everything else. So you're answering your own question, really. The election will cover, my interpretation, other currencies, not just the dollar. And we're seeing the strength in these other in sterling against the other currencies. It's only against the dollar we are weak, and I don't see that changing, not yet. Even if 142, 143, 142 holds, where are we going to bounce back to? I don't see 155. We come off so sharply from that area when we was up there at the beginning of the year. We was up there, we touched it, we just tanked after that. And even if we retrace a part of that, it only takes us up to about 148, 149 again. So I wouldn't get overexcited about sterling at the moment, no. Against the other currencies, buy it, sure. Buy it. It should carry on higher. Against the dollar, no, not so much. Probably against the euro, it may weaken for a while, but I don't see it actually going back below 130, 128. Okay, which would mean the euro sterling not above 77.5. I don't see that going back to our 82, 85 area again. I think not. I think we're more likely to bounce up to here and then fall again. I am hearing parity at some stage. This, funnily enough, is the ECU, all right, which is the European currency unit, because until 2000 we didn't have a euro. All we had was the European currency unit. But you can see, you know, it doesn't look strong, does it, in anything but the short term. Just be aware of that. New Zealand yen, well, I'll be. Are you doing this just to trick me? Why would you be looking at the New Zealand yen? I don't even think I've got it. I have. I'll fancy that. Okay. Well, that's looking, you're long. It's 91. Yeah, I think so. Look at that. You know, as long as we can hold, you have to, what we do with technical trading, what it does, it goes up in steps, okay? So you look at this, you've got a step here, a step there, got a step there. So what you would do is you would put the trend here, okay? And that's your downside risk. Now this is a longer term chart, so we just need that to get the actual longer term direction. That's the weekly. Now that looks like that's going to go down, that we've actually topped up here. Okay, but again, that's the key, this level here. And that's coming in at 84.32. All right. Daily looks positive. Now, if you put retracements on, you, anyone that knows me knows that I'm quite a Fibonacci retracement sort of person. Obviously, boy, we're gonna get problem here, okay? But there's no reason that can't go back up there. Look, we're at neutral. We're beginning to turn. And I think, yes, quite easily we could get back to 9100. Take your profit there, though, can you please? Because it's not looking great overall. Brilliant. Dollar, South African rand. I mean, really, guys, do you do this to other people? Really? These are things that I don't trade, all right? And it's ever so whippy at the best of times. Look at it. Now, what do you want to know about that one? I don't even know if you can trade that, to be fair. Well, you didn't used to be able to. I'm not sure anymore. Because it's not something I look at. Okay. Right. We look like we're topping out on this one, okay? We didn't have a key reversal day, but we've had a reversal day. Now, unless that can break today's high, which is, let's say, all right, let's say 123.5, okay? $123.5. Unless you can break above there, I think it's going to go lower. Be careful of long positions. These are beginning to turn. If we look at our RSI, you can see it's already turned. Once it goes through that 75%, okay, then you're going to get people coming in, if they trade this, and selling it. Because it's a rare thing to trade, you've got to be more careful than something like that has the depth, like the Euro, the Aussie, Sterling. Because you're going to be trading something like this, you know, that's why it's so whippy. How big is the list of pairs or instruments that you trade and scan? Scanning is different to trading it. Try and keep it. I wouldn't trade something like this, okay? Because there isn't the depth of market in the South African rand that you would say get in the euro. So you'd go to sleep and you'd have been having nightmares about what it's doing. It takes one big order and that can go up or down 100, 150 points. Don't want to trade anything like that. If you can keep it to trading 5 to 6 currencies and gold and an index like the S&P, the Dow, FTSE, not the DAX so much, but the other stock market indices, if you can just keep it simple. But what I do is on a Sunday, I go through a lot of charts and pick out different things. But bear in mind, you're looking at sterling Swiss, sterling euro, sterling Aussie, sterling yen, sterling CAD. They're all the same, really. It's the same direction, but with different prices. So you need to be careful that you're not got all your eggs in one basket. So that's why probably the euro sterling is the one to trade if you're looking at sterling crosses. So we talk about the Aussie. I'm going to run out of time in a minute, so I think the Aussie is going to be the last one I do. I can get rid of this. Yeah. Now the Aussie is a lovely little instrument. Now, there we go. We've got the daily. I'll put it on a candlestick chart for you. Aussie is one of my favourites, as you all know, and I do really, really like it. Now, the Aussie is based, and we are looking like we're going to go higher again. Now, we know from the downside that we had good, excellent resistance at support at 77.40. Now, that's obviously going to act as resistance on the way up. Now, if you connect that to that, We want to be buying Aussie above 77.40. Now, the reason for that is the Aussie looks like it's stabilised, hasn't broken up through that 77.40 barrier, but it's looking to test it. We are looking oversold. They are beginning to turn. There is a good chance. And normally the Aussie can be a leading currency. I know it sounds bizarre because it's like the other side of the world, but I sometimes look to the Aussie for direction in the other currencies because that breaks first, and it did break first. Like we broke 9200 at the end of last year. So with the Aussie, there's no reason why we cannot go back if we do a fib retracement level on it. And look, the 50% fib level comes in at 79.30. Now we topped out here at 79.14. So anything between 79.10, 79.40 is where we should top out. But you're only going to go back into the Aussie if we can get above 77.40. It's no magical thing. If we look across here, our first 23.6% fib level is at 77.37. That's your key. That was the break point there, 77.40. Down we came. We've based, up we've gone. You need that 77 ball to break before you go long again. Or any level back down 76, 45 to 25 will be a really good area to go back in and buy Aussie again. Have you heard of Africa? What do you mean, Waiki? Look, there's no point laughing at me, okay? Because I don't know what you're saying. Now, I've only got a few minutes left, very, very short space of time. Is there anything anybody wants to ask me at all? Lady Charmer, by name and by nature. Thank you very much. Really, really appreciate it. No, I'm not a broker. I'm sorry, I've never broked. Manojai. You're more than welcome, FX Street. Okay, all right, guys. Have a nice trading week, and catch you next month. You can look. You can get pivot points. John, great to see you again as well. You can get pivot points on the FX Street website. You can put the monthly ones in and you can get them yourself. All right, great to see you all, guys. Catch you next month. Bye.